Welcome back to MB Capital Strategies, a US upstream player that many have lost track of since the spin-off. APE ratio under 6, a free cash flow yield over 20%, and dividends for 55 years without interruption. This is APA Corporation. In episode 4 of my Upstream series, we'll see if APA is one of the most attractive cash flow stocks in the US E&P sector today, or if the market is right to remain skeptical. APA used to be Apache Corporation. After the spin-off, the company became more focused, leaner, and more cash flow driven. Today, APA is a pure exploration and production player with assets in the Permian Basin in the US, Egypt with a gas focus, the North Sea, and Suriname. Exploration Block 58. We currently have a market capitalization of around $9 billion and a share price of about $25. Not a super major, but that's exactly why it's exciting. Let's also take a look at how I'm invested here. I hold a total of 35 shares. My entry price was €19.53. Currently up 13%, which is €90.79, and a net dividend of €24.27, which I've already received. The 52-week low and high are between 11 and 23 euros, currently at 22.05 euros. Analysts set a fair target of 21.99 euros, and Investing Pro a fair target of 28.76 euros. If you also want to use Investing Pro for your fundamental analysis, you can get a 15% discount through my link. Today, we even have an advantage as research has already been created here from the last quarterly figures. Exactly, this report was created on January 9th, 2026 with the official current data, and we'll go into that now. A look at the hard facts. We have a turnover of approximately $9.4 billion. We have an EBITDA of around $5.8 billion for the last 12 months. We have a net income of about $1.5 billion and an EPS or earnings per share of $3.77. We have a PE ratio of 5.96, an EV/EBITDA of 2.4, and a free cash flow yield of over 21%. That's extremely cheap, even for a cyclical upstream stock. I see now, this might be a bit small. For people who might wear glasses, it could be a bit difficult. I'm just zooming in a bit so you can see it better. APA performed very well operationally in 2025. Production targets were exceeded. Our capital expenditure is under plan. We have saved $300 million in costs. The target is now a $350 million run rate, 2 years earlier than originally planned. For 2026, capital expenditure is down 10%, with Permian oil production stable at 120,000 barrels per day. And that is exactly what upstream discipline looks like. APA has noticeably strengthened its balance sheet, total debt of approximately $4.6 billion. A debt reduction of $430 million in the third quarter of 2025 alone. The target is $3 billion in net debt. Equity now amounts to $6.9 billion. And while it is not a high flyer, it is absolutely solid for a mid-cap upstream player. Now for the point that many overlook, the dividend. We currently have a dividend yield of about 4% with 55 years of uninterrupted dividends. APA does not pay absurd special dividends, but consistently pays out of cash flow. In the third quarter of 2025, $339 million in free cash flow, with $154 million returned to shareholders through dividends and buybacks. This is exactly the kind of defensive upstream income you want in your portfolio. The biggest optional leverage lies in Suriname. Block 58, a joint venture with Total Energies, the Crane Marsh project. First oil is planned for 2028. In addition, there are rumors of a merger with Repsol's upstream division. A valuation volume of around $19 billion. Nothing is fixed yet, but it explains why APA has been more closely watched lately. What are the risks here? And they do exist. Oil and gas price volatility, geopolitics in Egypt and the North Sea, and high capital expenditure requirements in Suriname. But APA has flexibility, can quickly throttle the Permian, and has a strong gas hedge via Egypt. Economically attractive up to 75 to 80 US dollars for Brent. APA is a classic spin-off laggard that the market has ignored for a long time. Extremely low valuation, high free cash flow, solid dividend, plus upside potential through Suriname or M&A. Not a low risk play, but highly attractive for cyclical cash flow strategies. What do you think? Buy APA or stay away? Write it in the comments and let me know. Otherwise, as always, this video is not investment advice, but just my personal strategy. I wish you all successful investing and see you in the next video.